Why does your trading strategy look amazing in your head, but the moment you use it with real money, everything falls apart? You studied the charts, you watched the videos, you found a strategy that supposedly works. Maybe it gave you a few winning trades at first, and then suddenly loss after loss after loss. Now you're stuck asking the same painful question. Is the strategy bad, or am I the problem? The truth? In most cases, your trading strategy is not failing for the reason you think. And in this video, I'm going to show you the real reasons why your strategy is not working, even if it looks perfect on paper, and what serious traders do differently. So let's break this down properly. You expect the strategy to win all the time. This is probably the biggest mistake of all. Most traders secretly believe that if a strategy is good, it should keep winning consistently. But that's not how trading works. Even the best strategies in the world have losing streaks. Even professional traders take losses. Even hedge funds have drawdowns. A strategy is not judged by one trade. It's not judged by 5 trades. It's judged over a large sample size. That means your strategy can be profitable overall and still lose 4 trades in a row, 6 trades in a row, sometimes even more. But beginners take a few losses and immediately panic. They start changing the rules. They take random entries. They abandon the plan too early. And the moment you stop following a system consistently, you're no longer testing the strategy. You're testing your emotions. You never properly back-tested it. A lot of traders say they have a strategy. But when you ask them if they back-tested it, the answer is usually something like, I saw someone use it. I tried it for a few days. It looked good on the chart. That is not backtesting. Backtesting means going through historical data and checking over and over again how the strategy performs under specific market conditions. You need numbers. What is the win rate? What is the average risk to reward ratio? What is the maximum drawdown? How does it perform in choppy markets? Without data, you are not trading a strategy. You are trading hope. And hope is one of the most expensive things in the market. You are changing the rules too often. This is where many traders destroy perfectly decent systems. They enter one trade too early. Skip the next one. Move the stop loss on another. Take profits early on the winner. Then increase position size after a loss because they want revenge. And then they say, see, the strategy doesn't work. But the strategy didn't fail. You didn't follow it. This is brutal, but important. If your entries, exits, risk, and timing keep changing every week, you do not have a strategy. You have a mood. And moods do not make money in trading. Consistency is what allows a strategy to reveal its edge. Without consistency, every result becomes meaningless. You are using the strategy in the wrong market conditions. Not every strategy works in every market. This is something many traders ignore. A breakout strategy may work beautifully in a strong trend and get destroyed in a sideways market. A mean reversion strategy may work well in ranging conditions and completely fail when volatility explodes. So if your strategy is not working, the first question shouldn't be, is this strategy bad? The better question is, what environment is this strategy designed for? The market changes personality. Sometimes it trends. Sometimes it ranges. Sometimes it becomes unpredictable and violent. If you keep using the same tool in every condition, eventually it will stop working. Not because it's useless, but because you're forcing it into the wrong battlefield. Good traders don't just learn entries. They learn context. Your risk management is terrible. This one is huge. You can have a strategy with a real edge and still blow up your account if your risk management is bad. Think about that. A profitable strategy does not save a reckless trader. If you risk too much on one trade, one bad move can damage your confidence and your account. Then emotions take over. Now you're scared to enter the next setup. Or worse, you double down trying to recover. And this is where the spiral begins. Real traders survive first. They make money second. Because if you can't stay in the game long enough, your edge never gets the chance to play out. A lot of people are not losing because their strategy is weak. They are losing because their position sizing is stupid. That's the hard truth. You are too emotional to execute it properly. Let's be honest. Most strategy problems are actually psychology problems wearing a strategy mask. You hesitate before entering. You close the trade too early because you're scared. You widen the stop because you can't accept being wrong. You revenge trade after a loss. You overtrade because you're bored. You chase because you fear missing out. None of this has anything to do with your system mount. This is emotional interference. And this is why many traders keep looking for a new strategy every month. Not because the old one didn't work, but because the new one gives them temporary hope. A fresh strategy feels exciting. It makes you believe this time will be different. But if your emotions stay the same, the outcome often stays the same too. Changing strategies without changing behavior is like changing cars when the real problem is your driving. 7. You don't actually have an edge. Now let's say the uncomfortable thing nobody wants to hear. Sometimes the strategy really is bad. Some strategies look smart, sound technical, and feel professional, but they have no real edge at all. Just because a strategy has indicators, rules, and fancy names doesn't mean it works. A real edge means that over many trades, with disciplined execution, the probabilities tilt slightly in your favor. That's it. Not massively, not magically, just enough to create positive expectancy over time. But many traders never verify that. They copy random systems from social media. They buy courses with flashy marketing. They follow signals from people who never show full track records. And they confuse complexity with quality. The market does not reward strategies that sound impressive. It rewards strategies that are statistically valid. You quit before the strategy has time to work. This is another silent killer. Most traders are unbelievably impatient. They want proof immediately. They want results this week. They want confidence after 3 trades. But trading does not work like that. A strategy needs time, repetition, data, execution, refinement, not emotional judgment after every single result. The irony is painful. Some traders quit a working strategy during a normal drawdown, then switch to a worse one, and repeat this cycle for years. So they never become skilled at one system. They just become experts at restarting. And restarting feels productive, but it keeps you stuck. You focus on strategy more than process. Here's what separates amateurs from professionals. Amateurs obsess over the setup. Professionals obsess over the process. What indicator should I use? What time frame is best? What strategy has the highest win rate? Did I follow my rules? Did I manage risk correctly? Did I trade the right market conditions? Did I record the result objectively? The obsession with finding the perfect strategy is usually just another form of avoidance, because building a real process is boring, it's repetitive, it requires honesty, and most people would rather search for a secret than build discipline. But discipline is the secret. So why is your trading strategy not working? Maybe because you expect perfection, maybe because you never tested it properly, maybe because you keep changing the rules, maybe because your risk is out of control, maybe because your psychology is sabotaging every entry. Or maybe because deep down you don't really have an edge yet. But whatever the reason is, this is the key thing to understand. A strategy alone will never save a trader who lacks discipline, patience, and self-awareness. Trading success is not built on finding one magical setup. It is built on execution, on repetition, on data, on emotional control, on surviving long enough to let your edge play out. So before you throw away your strategy and run toward the next shiny system, pause. Ask yourself one honest question. Is the strategy really broken, or have I never truly learned how to use it? And that question might change everything. If you enjoyed this video, subscribe for more trading psychology, market truth, and strategies that actually make sense. And comment below, what do you think is the biggest reason most traders fail?